Are you trying to get your head around the instant asset write-off and what deductions you're allowed to make in your business? Well, in this video, I'm going to try and break it down for you. G'day, Ben Futrell here, co-founder of Max My Profit. We're all about helping you build the business you imagined. Now, the instant asset write-off has confused a lot of people when it comes to what you can and can't do. There are certain restrictions as to what you can claim, and they've actually discontinued the scheme and replaced it with something else. But wait, it is a little bit better than what it was before. They've made a couple of improvements, and I'll run through that very shortly. Before I do that, just so you know, this is just general advice. Please don't take this as advice for you in your particular circumstance. You should always talk to your accountant when it comes to understanding about what you can and can't do in your business or in your personal circumstances, because they'll know best. All right, now that's out of the way, let's talk about what the instant asset write-off is and how you can use it and how it will benefit you in your business. So the instant asset write-off was introduced back in 2015. Up until that point in time, the maximum you could write off instantly was $1,000. So even if you bought yourself a laptop computer that was worth more than $1,000, you would have to depreciate that amount over several years. Now, the amount of years that you depreciated an item over depended on its expected lifespan. So if you bought, for example, a piece of equipment that was going to last 10 years in your business and it was a $100,000 purchase, the amount you could claim per year would be $10,000. The 10 years divided into the 100,000, and that's what they would allow you to do. A bit later on, they changed the rules to make it, I think, a $20,000 or $25,000 limit, and then it went up to $30,000. And then just recently, with the government stimulus package, when that was announced, they increased it to $150,000. Now, I did mention at the top of this video that they've actually scrapped the scheme and they've introduced a new one. It's called the temporary full expensing. And I'm pleased to say that there is no limit now. So that $150,000 limit has been removed, and there is absolutely no limit on what you can claim, bar a few exceptions. And we'll talk about that very, very shortly. Now, why would you bother trying to make a claim on something straight away? Why was this introduced and how does it help you? Well, let's say you did buy something for $100,000 in your business under the old scheme where you had to depreciate that over 10 years. Let's say you paid cash out of your bank account for that piece of equipment because you didn't want to borrow the money. Well, that cash would get paid out and you would see that as an outgoing cash flow. However, in the P&L on your company books, you would only be able to make a deduction for $10,000 of that, because that would be 10% of the overall amount if you were deducting it or depreciating it over 10 years, meaning that the other $90,000, which was the other 90% of that particular item, would be seen as profit, and the government would ask for their money for that. So they would ask you for some tax at a rate of, I think it was 27.5% last year. So on that $90,000, it would be somewhere around $25,000 in tax that you would have had to pay. Now with this new scheme, let's fast forward to the current day, if you buy $100,000 worth of equipment and you've got $100,000 worth of profit, you won't pay any tax, because that'll totally change the situation in your P&L from being profitable to breaking even, which means you won't have any tax to pay on any profits, or you won't have any profits for taxation purposes. And so that's how it works. Now, a lot of people wonder, can I just go and buy stuff and get the money back for it? It doesn't work that way. You don't get a full refund of the cost of the item. So if you go and buy something for $100,000, you're not going to get $100,000 back. And in fact, unless you're profitable, there's actually no advantage to you, except under the circumstance of the other scheme they introduced called the loss carryback scheme. So if you had made a profit last financial year and you go into a loss this financial year, you can actually apply that loss to last year and get a refund. But normally that is not the case. Normally what would happen is the only time you get an advantage by buying something is if you are profitable and if you need that piece of equipment. So don't go and buy things just for the sake of buying them. It's a myth. It's not going to actually help you. It's not going to save you any money. In fact, it's going to cost you money. It's pointless unless you actually need the equipment, or that equipment can help you make money. Now, when it comes to the assets that you're buying, a lot of you may be buying a motor vehicle and wondering if you can claim that. Well, there is a car limit. And that changes year to year. In 2021 financial year, which has just ended here in Australia, it was set at 59,000 and something. For the next financial year, which ends on June 30, 2022, the limit is 60,000 and something. I think it's $60,100 and something that you can now claim for. So don't think you can go and buy yourself a $150,000 motor vehicle and instantly write it off, because that is not the case. Also, if you're using anything like a car for private purposes, you can only claim the percentage that is business purposes. So if you're using the car on weekends, maybe it's 80% business, 20% private, then only 80% of the amount is claimable. And once again, up to that car limit. So if the 80% is less than the car limit, then you can claim 100% of the 80%, which is a good thing. But if it goes over that car limit, then you can only claim up to the car limit. Now, another question we get a lot is, can you claim for secondhand goods? The answer is yes. As long as your turnover is less than $50 million a year, you can claim. So if you're buying a secondhand piece of equipment, you are able to claim that as an instant asset write-off, or temporary full expensing as they're now calling it, and get that money taken straight off your profits for the year and be able to reduce your taxation or your profit, your taxable income. The other thing that you can claim as well, which is great, is improvements. So if you've got a piece of equipment, so rather than replacing it, you might want to improve it, or maybe the secondhand equipment that you bought needs improving for it to work and to be applicable to your business, then you can also claim on the improvements that you've made to that piece of equipment, which is great as well, because that means that you can get that tax deduction instantly in your business. But to summarize, the instant asset write-off is now gone. It's now called the temporary full expensing. There's no upper limit. You need to turn over less than $5 billion or under $50 million if you're going to use this scheme for second-hand goods. And there is a limit on cars of around about $60,000. So hopefully that's made it nice and simple for you. If you're not making a profit, don't even worry about it. You don't really need to know too much about it, except that you do have that loss carryback if you made a profit last year. Once again, though, talk to your accountant to make sure you get the best possible advice. If you found this video helpful, give it the thumbs up. Make sure you leave any questions down below in the comments. We do monitor the comments and we'll get back to you as soon as we can. All right, take care.